Maduro Captured. The geopolitical shock that just rewired the global stock market. The day the markets changed. Let me ask you a simple question. What if I told you that today's stock market rally had nothing to do with earnings, nothing to do with innovation, and nothing to do with economic strength? What if I told you that the markets exploded higher today because of geopolitics, oil, and raw power? Because that is exactly what happened. Today, global markets reacted to one of the most extraordinary geopolitical shocks of the decade, the capture of Venezuelan President Nicolas Maduro. And within hours, oil stocks surged, defense stocks spiked, the Dow Jones touched record highs, gold jumped, and volatility quietly crept back into the system. This wasn't just a news story, this was a warning signal. Because when markets rally on geopolitical chaos instead of productivity, something is deeply wrong beneath the surface. And today, we're going to break it all down. What really happened? Why oil and energy markets reacted instantly? Why AI stocks may now be standing on a cliff edge? Why crypto regulation just took a historic turn? And why 2026 could become the year portfolios either survive or collapse. Stay with me until the end, because the final minutes may completely change how you look at your money. What really happened in Venezuela? Venezuela is not just another struggling country. It sits on the largest proven oil reserves on Earth, larger than Saudi Arabia. Yet, for years, those reserves have been locked behind sanctions, mismanaged by corruption, starved of foreign investment, and effectively removed from global supply. Under Maduro's rule, Venezuela went from one of the richest nations in Latin America to an economic catastrophe, hyperinflation, mass emigration, collapsed infrastructure, oil production falling to a fraction of its potential. And then, suddenly, everything changed. Today, confirmation emerged that Maduro had been captured, triggering immediate global reactions. Markets don't wait for explanations. Markets don't care about morality. Markets react to power shifts. And traders immediately asked one question. Does this mean Venezuelan oil is coming back online? That single question sent shockwaves through oil futures, energy equities, emerging market debt, defense contracts, and currency markets. Because if Venezuela's oil returns to global supply, everything from inflation to geopolitics changes. Oil. The invisible engine of every market. Most people think the stock market is driven by technology. It isn't. The real engine of the global economy is energy, and oil sits at the very center of it. Oil affects transportation, food prices, manufacturing, military operations, inflation, interest rates. When oil prices rise, inflation follows. Central banks tighten. Consumers suffer. When oil prices fall, markets rally, governments breathe, risk appetite explodes. That's why today's reaction matters. Energy giants like Exxon, Chevron, and BP surged not because demand suddenly grew, but because supply dynamics may be changing. If Venezuelan oil re-enters global markets, OPEC's power shifts, U.S. energy strategy changes, Russia's leverage weakens, and energy geopolitics are rewritten. But here's the dangerous part. Rebuilding Venezuela's oil industry isn't quick. It requires billions in capital, years of infrastructure repair, political stability, foreign partnerships, which means markets may be front-running something that doesn't yet exist. That's how bubbles form. Why the Dow hit record highs? Here's where things get uncomfortable. The Dow Jones didn't hit record highs because productivity improved, wages rose, debt fell, or growth accelerated. It hit record highs because money has nowhere else to go. Let me explain. For years, central banks flooded the system with liquidity. Cheap money pushed investors into stocks, crypto, real estate, tech speculation. Now inflation has trapped policymakers. Rates can't go much higher. Cuts risk reigniting inflation. Holding cash guarantees loss in real terms. So when a geopolitical shock creates volatility, capital rushes into safe growth narratives, even if they're fragile. Today's rally wasn't confidence. It was fear disguised as optimism. AI, boom, or bubble. While energy stocks surged, another story quietly gained traction. A warning from one of the most respected investors on Earth. Ray Dalio, founder of Bridgewater Associates, publicly stated that the AI boom may already be entering bubble territory. Let that sink in. AI has become the justification for extreme valuations, the excuse for endless capital raises, the story holding markets together. Every bubble in history had a narrative. Railroads, electricity, the internet, housing, crypto. AI might be next. And here's the danger. When markets are already fragile, bubbles don't pop gently. They collapse violently, often triggered by unrelated events, geopolitical shocks, energy disruptions, liquidity tightening. Sound familiar? Crypto's quiet breakthrough. While everyone was watching oil and stocks, something historic happened quietly in Asia. Japan signaled plans to integrate crypto assets directly into traditional stock exchange infrastructure. This is not hype. This is not speculation. This is regulation. The thing crypto has waited for, feared, and needed. For years, crypto lived in a gray zone, too big to ignore, too risky to embrace. Now, one of the world's most conservative financial systems is opening the door. That doesn't mean prices go straight up. It means crypto is becoming unavoidable. And when systems integrate crypto during periods of debt stress, currency debasement, and geopolitical instability, they aren't doing it for fun. They're doing it because the old system is creaking. The real risk nobody is talking about. Here's the part most YouTubers won't tell you. The real danger isn't oil. It isn't AI. It isn't crypto. The real danger is correlation. Everything is now connected. Stocks, bonds, commodities, crypto, geopolitics. When correlations rise, diversification dies. That's when crashes become systemic. If oil spikes unexpectedly, inflation resurfaces, central banks panic, AI valuations compress, you don't get a correction, you get a repricing of reality. And history shows us exactly how that ends. What happens next? Over the coming weeks, markets face jobs data, inflation readings, central bank signals, political escalation risks. This is the most fragile environment markets have faced since 2008, 2020, and arguably worse in structural terms. The question isn't, will something break? The question is, what breaks first? The choice in front of you. Every major financial shift creates two groups, those who panic and those who prepare. Preparation doesn't mean fear, it means awareness. Because money doesn't disappear, it moves. And those who understand where it moves next survive. If you found this breakdown valuable, like the video, subscribe for deep financial analysis. Share this with someone who still thinks markets are normal. And comment below, are we entering a new oil-driven era or the final phase of the bubble? Stay aware, stay awake. This is Felix. See you next time.